Hello traders out there in Traderland, D7 here with Grok Trade, and we're in trouble. Let's talk about this. All right, here's the deal. Looking at the SPDR ETF. This is the S&P 500 ETF SPDR called the SPY. It's the 500 blue chip companies, big blue chip companies here in the US. Check this out. We're up. Let's go to a candlestick. We're up. But then let's zoom in, and let me show you what happened on Friday. Friday, we started off all fine. The week was fine. We had a little pullback for the week. Friday, we started off fine, but the last hour of the day was a bloodbath. We come screaming down. A lot of people saying Apple, because developers can now use other app stores other than Apple, cause this market to drop. Whatever the case, all I know, as a trader of 23 years using technical analysis, okay, is anytime trend lines get broken, that is bad news. And that's precisely what we have here. Let me build another case. I want you guys to see this. We closed below two major trend lines. Bad news. This is a big time warning. Warning, guys. I need you to hear what I'm saying here. This is not a good move for the markets. And the drop on Friday was on huge volume. The other thing I want you to look at is we're going up in a rising wedge. Let me show you what a rising wedge is for you, the newbies out there that don't know a lot about charts yet. You can go to freeonlinetradingeducation.com. The link's down below. Go to the chart school, learn about this. But it's called a rising wedge or an ascending wedge. It could be called either. These are highly bearish. It's a trend that goes up, but the two trend lines are condensing together, coming to an end. So when it runs up and it comes into an apex right there, when you see this, the pinching, an upward movement pinching, that's bad news. I want you to put your eyes on the red line. This red line is indicative or signifies what's happening with price action. Price action is going up. This red line is going up. I added the red line just to show that because I want to show you the MACD, centered oscillator. The MACD centered oscillator, don't call a MACD an indicator. That's lazy. That's not correct. If you're going to be out there with people that know charting, call it an oscillator. And if you want to be really geeky, call it a centered oscillator. The reason it's called a centered oscillator is because it has a zero line in the middle, MACD. So the MACD is centered oscillator. That has swings, but they're lower swing highs. The price action has higher swing highs. We're going higher here, higher swing highs. But the MACD has lower swing highs, That's called a bearish divergence. Whatever the MACD is doing, lower swing highs, is what this will do next. That's the rule of thumb. So this is called a bearish divergence on the MACD centered oscillator, and now it has been confirmed with the major break of the trend lines. I don't care if it goes below the trend lines, okay? I don't care if it goes below them. What I care about is, do we close below them? So red candlestick, we did close below them. If I go to a line chart, you can see it. We went below this one and this one. We closed for the day, guys, on Friday below both of those on massive volume. Bad news. But what does the weekly chart hold? Weekly chart is a much bigger, because daily is only confirmed by the higher time frame. In this case, the daily chart is only confirmed by the weekly time frame. Let's see what's happening with the weekly. If we go over here to the weekly, we check on the weekly. Bam! We look at this, guys. Big cross below two major trend lines down below. We broke the trend lines, guys. Look at the red lines going up. Higher swing highs here, lower swing highs here. We did get a crossover on the centered oscillator. See this? So we have crossovers here. We have crossovers there. There it is. Whatever this is doing is what that will do next. This is in dire trouble. I think the next place that we should go is 424. We're at 445 right now. The question is, how fast will we get down there? I'm not sure. We have a nice, we have projections. If for you guys that do Fibonacci retracements, this is quite the run, guys. If I go over here and do the Fibonacci retracement and I go to the low, go up to the high here, we have a stop at, this is the 20, look at this. 23, this is a good area, 23.6, 423. We already have a line there. But this could easily get down to 388, the 50% Fibonacci. It could drift right down there. And it could even go as low as 61.8. If it goes below that, we're in a lot of trouble, guys. If it gets below 370s, we're in a lot of trouble in the spider. Okay, but we can't get down there unless the trend line gets broken. We did break. If you go to a line chart, you'll see this. Let me get rid of this so you can see this. So again, this weekly chart on the spiders, weekly chart. You can see resistance, support. We're pinching. We can't even hit resistance here. I want you guys to see this. Let's get geeky and really zoom in. We hit resistance, we miss resistance, we miss resistance, we're missing it, and then finally broke. That shows increased weakness. Finally broke down. That is bad news. I don't care what the news is. I don't care what the catalyst was. I don't care anything about that. What I care about is price. Price always wins. Price is whoever reads price the best wins, period. If price did it, that means the market confirms it. The price will tell the tale. Bulls and bears fighting will hammer it out to say what reality is. Do not lean into news thinking that's reality. Don't lean into fundamentals thinking that's reality. Lean into the technicals. If you break a trend line, that has to happen first. Never. Let me slow down here. I want you guys to not ever miss what I'm getting ready to tell you. If a market is going to correct and a major drop is going to happen, it can't do so until a trend line gets violated. That's what we see here. See this? Trend line, up, up, up. We have two trend lines violated. There it is. We could not crash and burn unless that first happens. Does it mean we're going to crash and burn and this is the top? No, no, no. Nobody can ever guess the top. They can guess tops, but they're lucky. No one will ever pick tops and bottoms. Impossible to do. And if anybody thinks they can, just you can smirk and nod your head and walk away, but it can't be done. So I don't know if this is the top or not. All I know is it's a big rising wedge. We're very extended to the upside, and we broke trend lines on the daily and the weekly. That's what I know. So the next logical thing I like to do is go to the higher time frame. I mean, we're just getting started in September, okay? We're about halfway through. But I like to take a look at the monthly to say what's really happening here. So if you look at the monthly, the thing I want to share with you is the MACD crossover we're getting right there. Do you guys see that? And we got a big red negative tick on the histogram. That's because the crossover that did take place. We have never been as high. Look at this. It's been a long, long time, guys, on the monthly chart. Never. On the monthly chart have we ever been this high. Look how extended we are on the monthly, guys, MACD. And we finally got the crossover. If you look at, this is the RSI 14, just an average. Look how extreme, this extreme high we're at right there. Extreme high. Last time we were at this extreme high right there, we had the big market correction here. That was the COVID drop. Or no, I'm sorry. This is the monthly chart. This is the financial crash. So we had some highs here and we get soft. You see that? We get really soft. If we blow this up, you can really see it. We get really soft after we hit these highs on relative strength. This relative strength, look at this. We come crashing down right after we got that high. This high comes crashing down, really nasty. And then we didn't even get up to these highs and it finally crashed down. There's the COVID. And then we rallied up, 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 up. Okay. Now look how high we are again, guys. And the crossover. That's why I'm saying this could be a high. This could be a top. This could be happening. So remember that the guy from Grok Trade, who's been doing this 23 years, D7, said this. But let's zoom in on the monthly. The monthly is not done yet, so we cannot put too much weight on it. But this is a tweezer top. It's not a perfect tweezer top, but there it is. And we almost have a thrusting pattern, bearish thrusting pattern. But it's a tweezer top, bearish thrusting pattern. But the month's not over yet. Anything could happen on this. It could look like anything in the next couple of weeks. So I'm not putting too much weight or credence on this. So don't hang your hat on this one. Okay. Now, what I want to do is go over here to the dailies. This is the dailies again. I wanted to build the picture on the S&P. We got it, right? We're in trouble. But do the diamonds reflect that? Here's the daily. Yeah, the diamonds did it Friday, Thursday, Wednesday, Tuesday. Tuesday, the diamonds broke the trend lines. I wasn't around to do the video to do this. I've been out traveling. I went back to Indiana. I live in Tampa now. I'm back in Indiana, and check this out. I would have been screaming big trend line broke here, guys. And this is what happens when trend lines break, okay? I just want everybody to understand this. When a trend line breaks, usually bad things happen. And this is what happened in the latter part of the day on the diamonds. Then the accuser, the only thing that's doing halfway well. This is the daily, but I mean, it's a big drawback, but we're not breaking any support lines. It is a rising wedge. And you know what? I need to do these. Check this out. You see how we have a bearish, we have a divergence there, here, and look how we get soft and we go down. But the QE kept bringing it up. So this has lasted forever. Check this out. So if you look at this run here, this is the daily chart on the Qs. I'm going to go from here up, from here down, bearish divergence. Again, I think we have a good chance this week breaking down below this support line. If we do that, techs are in a lot of trouble. Disclosure, I went to cash Friday. I'm cash. I am not drinking Maalox this weekend. After a big drop like that, usually you get a rebound. You'll get this little rebound that might happen Monday. Boom. But what I'm looking for is if Monday bounces, we get a big pop Monday. I want to see what happens. Do sellers come into that and sell into that strength? That means smart money is getting out. I think smart money started leaving on Friday. That's what it looks like. So I got out. Here's the daily on the Russell's 2000. Russell's 2000, we're in a symmetrical triangle. We're now below all major moving averages. We closed below all major moving averages. It's a bull pullback, but it's a nasty looking one. We do have support coming here. We went sub-zero on the histogram line, the zero line on the MACD. Financials, so the Russells aren't doing too bad. The Nasdaq's not doing too bad. That's the only hope we have in this market right now. Financials, come on, what's that doing? Bad news. So Friday, Thursday, Wednesday, Tuesday, Monday, Friday, Thursday. So 2 Thursdays ago, that was the problem. We cracked that trend line. Oh my goodness, guys, look at this. Support. You see those two support. We broke right there. Bad news on the financials, the banks. We broke it. In the last week and a half, just bearish city going down. Guys, though we have some support coming up around $37 on here, but we're there already. This is bad news. Do you see how we have a higher swing there? Do you see how the trend line's going up? It's an upper slope, higher swing high. Let me show it to you. If we go here, up, oh man. You see that? Do you see how that's going up? Look how bad that's going down. See that? That was indicative. That told us there's the bearish divergence, and this is what happens after bearish divergence, especially when the lower trend line gets violated. That's what happens. This is how I was able to say in 2007 bad things were coming before 2008. I had no idea it was going to be a monster drop on the financial crash as big as it was. All I knew is, guys, this is thunder in the distance. I kept saying this. This is bad news, thunder in the distance. I don't like what I'm seeing, just like what I'm saying now. We're long in the tooth. We've been up 12 years or so. So U.S. dollar daily. Something I do want to look at here before I get off of the financials. Financials are really important to me because they're the markets are only as strong as the financials. So the thing I like to do is look at the weekly. The weekly chart on the financials have broken a trend line, guys. Bad news. This is horrible. It's no good. Go to a line chart. Support. We broke that support. This is horrible news. This is bad news for what we're seeing in the market right now on the financials. See how we're going higher here? Look what the MACD is doing. Going lower. You could see this also here. This one was going lower. See that? It's going lower. And look how this one's going really high. So that divergence happened, showed the weakness, and then we get another divergence. We're going up here. We're going up there, and then that is a big divergence, guys. And then you break the trend line. A divergence, trend line violated. Anything can happen from that point forward. It could get nasty, bad, horrible. You would not want to be long in this environment, especially if the monthly charts start reversing downward. That's bad news. While we're here on the weekly, here's the Russell's 2000. We haven't violated the line yet. This is the only hope we have. The small caps, can we stay above that trend line? If not, we're toast. NASDAQ. Oh no, are you kidding me? Hold on, I gotta look at this line. Make sure I like it. This line goes to that support, good. That support, good. Are we below it? We're below it, guys. Do you guys see that we went below that line? Can you see that? I don't know. It's below it. I'm not liking it. It's below it, guys. Okay, so here, let me see here. Do you see how we're going? We had a crossover there. There's the MACD. Look how we're going up there. Oh my goodness, guys. This could be topping out on the weekly chart, a tweezer top. That is bad news on the NASDAQ. I am really, really glad I am short. Or I'm sorry, I'm not short yet. I am flat the market. Really, really glad. Really, really glad. So we already looked at that. So the diamonds weekly, it was last week we broke it. Last week we broke it, but no one knew it on the weekly chart on the diamonds. Look at that. We were below it on the weekly chart on the diamonds. The Dow broke the trend line. This week we dropped. When you break trend lines, bad things happen. Wow. So while we're here, let's go and look at a couple of other things, okay? So I want to look here at U.S. dollar first. U.S. dollar is bouncing off the support line. Do you guys see this? U.S. dollar is going to get strong, guys. The monthly still heading up. The daily under a lot of pressure. Let's see what happens. It's under moving averages, building kind of a high base. I don't know. Let's see what happens there. Silver is in a downtrend. It's a bull pullback. Look for a higher swing low. If this thing starts to rally and it gets above this trend line, that's a buy opportunity. I don't like the weekly. We're dropping the monthly. I do not like gold. Gold, big symmetrical triangle. It's a pullback, lower base. Not interested in this. Gold and silver, we're at a support line. This would be a time to buy on the weekly chart on gold. But I don't like that we could not get to resistance. We're only hugging the support. If we break that support, bad news. The monthly is sideways and it doesn't know what to do. So what I want to do is go to the VIX, see what's happening. Oh, are you kidding me? Are you kidding me? We have a resistance. Oh, here, let's go to a line chart so you can really see it. Resistance, resistance. We broke resistance. So we cracked resistance on fear. Fear indicator is now broken. Let's see what the weekly chart's doing. Weekly chart. Oh my goodness, we're right at it. Let me make sure I like that line. Let me make sure. Yeah. So support. Or I'm sorry, resistance. We go down and we're right at it, guys. This is, you're telling me there's a chance. This tells me, with a couple of things I'm looking at, Monday could get bullish and the rest of the week could go bullish. If it does not do that, if we don't see that, and we see more fear come into the market starting Monday, late Monday, if we see that, bad. Not liking that yet. Oh. So let me show you a bullish divergence. See how we're going down there. You go up here. See that? Bullish divergence. Same thing happens the other way. Now look at this. Boom. Oh my goodness, guys. This is something we got to watch for. Are we going to get higher than $21? If we get higher than 21, we stay above 21, not dollars, 21 points. If we're above 21 on the VIX, if we stay above 21, if we get above it and stay above 21, you don't want any part of this market, not on the bull side, okay? Not on the bull side. Bad news. Yeah. So I have to take a quick look at the weekly. Sure enough, the weekly, we are right at it also. Just perfect. The weekly and the daily. No. The daily, weekly. Hold on. Let's go back to they look identical. No, okay, so we're over. So the daily, we broke it, okay? So let's just get this straight. We broke it. That's bad news. But the weekly, we've got to plow through. The daily is saying we're toast. The weekly is saying not toast yet. We're at resistance. We could break through. Okay. A quick look here at Bitcoin. Had a nice rally. We got up to 53,000 again, it looks like. 53,000, and then we dropped. We're starting to bounce right now at around 46,000. Not looking too bad. And big drop at resistance heading down on the Bitcoin front. Ethereum, it broke a trend line. It's going down. It hit a resistance and it's going down. GBTC, if you want to add Bitcoin, you can do G and then BTC. Grayscale. We're up, double top. Wait for another pullback before you get in. But this is on the weekly chart. Looks like it's getting ready to break out to the upside. The monthly chart looks like consolidation. So those are the things that we're looking at here. So let me wrap it all up by saying this. Is this a market top? No. I don't necessarily know if it's going to be, but it definitely could be. Is this a market? So my phone's blowing up here. Let me set this over. Is this a market top? Yes, it could be. This could be it. But let me say it this way. Is this a market top? Who knows? But let me say it this way. It can't be a market top unless trend lines get violated, broken. And I like trend lines when they get violated, when I drew them the right way. Grok Trade, I teach a class on trend lines. If you want to geek out on trend lines, go take that class at groktrade.com. And the trend line course is deep. It will get into drawing them correctly. If they're drawn correctly and you get the bearish divergence on the MACD along with a breaking of a support line, woo! People say, how do you know that magic? That's craziness. It's not. It's technical analysis. Not tea leaves, not star readings, nothing like that. It's reading charts and reading them at a professional level. That's what you do. That's why we mentor. That's why we teach. That's why everybody should go through our mentoring program, the 301. The 101s, if you haven't taken the 101s, go to freeonlinetradingeducation.com, freeonlinetradingeducation.com, links down below. Take the free 101 course. That'll get you started. It's all free. We will throw in the 201 course. That's me teaching for 6 solid hours, giving you everything you need to know. 201s will be free of charge when you get the 301s. The 301s and the mentorship comes with the 201 package. You'll want that. You'll want that. So anyway, I'm back from Indiana visiting family, and now I'm back here in Tampa and running my other financial business. And I'm in my humble townhouse here. I don't know. It's just, I need to be doing these videos from my office downtown in the Sykes building. It looks like a grain silo. They call it the beer can building. It's a great view, looking over the city, looking over the river that goes into the bay. It's just gorgeous. It's a much better backdrop than what I have going on right here. But I had some of you guys say, you don't care about the backdrop, just give us the videos. Don't be skipping weeks. Can't promise that I'll be doing them every week, but I try. If you like this level of education, be sure to subscribe. If you like the video, give me a thumbs up. Extra bonus points for you if you leave a comment on your thoughts on if you think we could be topping out in the markets right now. And if you put made it at the end, only you and I will understand why you put made it in the comments, because I'll know you've watched it till this part. If you've been watching me for any amount of time at all, I just want to say thank you. I appreciate everybody that comes here. You don't see ads, we don't market, we don't do anything. You guys find us. You won't see our mentoring ads anywhere. We don't advertise it. You guys find us for training. You guys spread the word to your friends and you come to us. That's how I want it. We only teach 3 days out of 30. We do 10% of our time teaching, the rest of the time we do trading. Traders first, teachers second. Type made it if you made it to the end. Love you all. Take care. And check out this CGI stuff that I'm doing. You know, if you haven't watched it yet, super cool.